I think the stock market's trying to figure out, is this a dip in noisiness, but we exit 2026 in better shape? If that's the case, then equities would have already made their lows at 48.35 on April 7th, because that was sheer panic and dislocation. But of course, if we don't get trade visibility, and so 2026 looks like we're dragging for another 2 or 3 quarters into 2026, then of course the stock market is going to have problems.
All right.
Tom Lee opens with a powerful insight. The U.S. stock market is currently caught in a state of uncertainty. Investors are struggling to determine whether today's economic disruptions are just short-term noise or early warnings of something more serious and systemic. According to Lee, the economic data over the next 3 quarters, about 9 months, will likely be unreliable. Factors like tariffs, front-loaded growth, and abrupt policy shifts are distorting the picture, making it difficult to separate signal from noise. Drop your thoughts in the comments. We read every one, and your engagement really helps support the channel and boost visibility through the YouTube algorithm. Let's go back to the video.
Oh, well, the stock market is clearly trying to figure out the path of the economy going forward, because I think it's well socialized that economic data for the next 3 quarters is going to be polluted by not only the tariffs, but some of the bullwhip effects and the distortions that have been introduced.
For the next 3 quarters?
Yes.
9 more months of a lack of clarity?
Yes, because I think at the core, I think the stock market's trying to figure out, is this a dip in noisiness, but we exit 2026 in better shape? If that's the case, then equities would have already made their lows at 48.35 on April 7th, because that was sheer panic and dislocation. But of course, if we don't get trade visibility, and so 2026 looks like we're dragging for another 2 or 3 quarters into 2026, then of course the stock market is going to have problems.
All right, so let's turn to the gentleman at your left to maybe answer that question, Steve, this $1 trillion question about what's going to happen with the economy. And interestingly enough, I was at a dinner last night with a bunch of supply chain executives.
Right.
Great timing. They were much more bearish than I thought. I would have put out, I asked around the table, what are the odds of a U.S. recession this year? And the average response was 75%.
Wow.
Yeah.
Well, can we just dispense with what the president put up there? This is the president's stock market. I mean, let's just be clear about that. I think every trader on every floor today would roll his or her eyes at that comment. And you can see that by looking at the stock market. And I think the key here is the extent to which the market rallied after the president's election. That was his stock market too. I don't remember if he actually took credit for that. And really the story is the extent to which the president has squandered that. And we actually have a chart that shows this. If you put up the chart of our outlook on GDP, look at where the market or the forecasters were saying GDP was going to be in the first quarter, 2%. Second quarter, 2%, third quarter, all the way across. And then you look at where it is now. And it's the back half that's the problem. You have this trade problem now. It bounces back next quarter because the front running goes away. And you can see that, folks, in the next chart. You can see my conclusion now is if I look at a piece of data and I can't see how it's infected by the tariff issue, I have to look harder, because almost every piece of data is. Folks, the next chart shows the impact, today's GDP and the contributions to GDP, and you can see how we got to minus 0.3%. They're so good in the back. They're just following me as I ad-lib this along. There is a 4.8% subtraction of net exports from GDP. Now,
5-point drag, yeah.
Some of that showed up in inventories, which was a 3% impact,
2.3,
but not all of it. Why? Because they end up in this trade purgatory called bonded warehouses.
It's as if you were at this dinner last night where we're all talking about bonded warehouses.
Okay. So it's out there. That stuff is out there somewhere. It could go back, but it's not in a place where it has to pay the tariffs yet. And then also the consumption number, which you saw was 1.2%, that was also affected by trade because people brought forward the tariff, the cars. They bought cars ahead of time, trying to get in front of the tariff. So we don't know exactly what's going on. Probably a bounce back next quarter. that is a result of the trade, the front running unwinding. And then maybe by the third quarter, we're into understanding what's really going on.
Our forecast is remarkably in line with what Steve just lined out. We're going to get arithmetically, at least, a bounce back in growth in the second quarter in terms of GDP. It's the third quarter and even fourth quarter I worry about. But I think the third quarter is when it kind of comes together and we could see, a decline in GDP. Now, is it actually recessionary? It may not be. That will depend on a lot of factors. Right now, we're kind of borderline in our forecast, whether we have a recession or not. And if we do, it's pretty mild because we still have good fundamentals with the household balance sheets and corporate balance sheets. Really, what's going to call the tune is what kind of rollback do we get in the effective tariff rate, which shot up. Right now, it's like 35%. It went from 2.5 to over 30. We need to get that pared back. So those trade deals that they've talked about, they need to come pretty quickly.
Tom Lee highlights a bold and strategic vision. Donald Trump has signaled his intent to make the U.S. the global hub for blockchain innovation, a move Lee calls smart. Why? Because if the U.S. can position its digital dollar as the go-to reserve currency for billions worldwide, it could lock in monetary dominance for decades. But here's where it gets really interesting. Lee points out a unique form of monetary optionality. Imagine users saving in digital dollars. If they begin to fear devaluation, they could instantly shift into Bitcoin to protect their purchasing power. Later, if Bitcoin's volatility becomes too much, they can rotate back into stablecoins, all without ever leaving a decentralized system. It's a seamless, strategic framework, one that blends stability, freedom, and financial resilience, all built on the backbone of decentralized infrastructure. If this kind of insight interests you, make sure to like this video, subscribe to the channel, and turn on post notifications so you stay ahead of the curve. Drop your thoughts in the comments below. Do you think the digital dollar can truly dominate? We'd love to hear your take. Let's go back to the interview.
I think the whole space is underappreciated. It only has $3 or $4 trillion of value in it. The old world has $800 trillion. So I would say the whole space is underappreciated. But I think one important development, and look, I'm a market guy, I'm a financial guy. I did not come from Silicon Valley, the technology part. I think the stable coins have really proved out a very important use case here. And I love Nick Carter's presentation that he did at Singapore 2049, showing, I don't know if you saw that or if you were there, just sort of the emerging market needs and demand for dollar stable coins. It's just and he's done other stuff on it too. He's a brilliant young guy. But I think, look, last year I read last night, I think the number's moving around, but $15 trillion of stable coins. I think that was the volume. I don't know if that was the amount that was settled or the volume last year. It's more than MasterCard and Visa. Now, I know many people look at these numbers differently and they say, oh, well, you have to adjust it. Okay, so it's 10 trillion. Even if it's 8 trillion, it's a huge number. And the digitization of currency is happening. Now, what is a bigger trend than that? Bitcoin is the core collateral of the space. Proof of work algorithm and its decentralized nature makes it pristine collateral that no one can touch. And I think ETH and Solana are more in the programmable, realm and have different uses than Bitcoin. But stable coins have the ability to help the traditional world port over some of their value without having to make a decision about Bitcoin or ETH or Solana. And also look, these fiat currencies are a lot more stable, right? A lot less volatile, and they're used more easily in payments. So if I'm a guy sitting in Nigeria and I've got my savings in Naira, which devalues 50% every year or whatever, oh my goodness, stable coins, this is a lifeline. I can't get a bank account. So I have a digital wallet. I've got my Kraken account. and I'm holding dollar stablecoins. I mean, how difficult is it to understand that this is that's a life-changing type of event for people? We as Americans or Europeans, everyone is wealthy and, wealthy in comparison. We don't think about these things. We just go to our bank account and we have our money there and we have a credit card or whatever it is, we Venmo or PayPal. But it's just shocking to me. You say underappreciated, right? How is it that concept, which is really simple, no one has to understand how blockchains work. No one has to understand what the proof of work algorithm is or read the Satoshi white paper or try to figure out how Ethereum works. There's none of that. This is a really simple concept vis-a-vis stablecoins. So I think, simplicity is so important. We own Circle, which it's 8% of my third fund. And, Circle is sort of the regulated US-centric stablecoin producer. We love Circle. We love their relationship with Coinbase. We love Coinbase too. I think that what we're going to see now, I do believe Trump has said he wants to make the US the crypto blockchain capital of the world. So I mean, it's smart for so many reasons. Like, I don't think we have long enough time in this call to get into why it's so smart. But one very clear reason why it's smart is that we want those people in Nigeria and all around the world using the digital dollar as their method of savings. Now, if they feel the dollar is going to be devalued because fiat gets devalued, then in a nanosecond, they can switch to Bitcoin. And then, you know what? If their Bitcoin doubles and they say, you know what? I've maintained purchasing power. I actually now need to spend it, and it's not easy to spend the Bitcoin. And you know what? I want some stability. I don't want to have to deal with 10% daily moves in Bitcoin. That's still a big problem. People in the space don't understand that for the traditional world, the volatility is what keeps a lot of them out. Gold is not volatile. Okay, gold is a good store of value. Gold is not volatile. So this stablecoin use case, I think, has definitely been proven. I think there are going to be many businesses that pop up around it. It won't just be Tether and Circle. I think the trading volume was going to be hundreds and hundreds of trillions.
This use case, simple, accessible, and global, is often overlooked in the West, where financial stability is taken for granted. But for billions around the world, stablecoins aren't just a convenience, they're a lifeline. In economies plagued by inflation, limited banking access, or political instability, stable digital currencies offer real empowerment and financial freedom. Tom Lee wraps up with a bold prediction: the stablecoin market won't be dominated by Tether and Circle forever. He envisions an ecosystem that expands rapidly, driving hundreds of trillions in future trading volume and revolutionizing both payments and global savings. If you're serious about the future of money, now's the time to take action. Like this video to support deep dive content, subscribe, and turn on notifications so you never miss a key update. Drop a comment. What's your view on stablecoins and their global impact? And don't stop here. Watch our next video on how Bitcoin and digital assets are reshaping financial power dynamics worldwide. Trust us, you don't want to miss it. Be informed. Be early. Be ahead. See you on next video.